everybody's joined. So I think if I could actually invite all the panelists to join me. To introduce myself, my name is Andrew Harper. I'm a partner at Reed Smith, a law firm, a global law firm. I'm based in London. We of course have offices all throughout the world. I'm joined today by an illustrious panel to discuss finding debt in the helicopter industry. So if I can introduce them all, we're joined by Arnaud Fiscel from Bank of China, Ray Gonzalez from First Citizens Bank, David Mizrahi from Airbus Bank, Shaun Pickering from NatWest, Jöerg Schirrmacher from Helaba, and John Shaw from Investec. So if perhaps I kick off and ask my first question to you all, I think it's fair to say that the helicopter market has traditionally been regarded as perhaps a niche area of aviation finance, given the sort of mission-specific element of the assets. What attracts you as lenders to this market? And perhaps if I could kick off with you, Ray.
Sure. Yeah, sure. Thanks, Andrew. I think I tend to go back to a fundamental approach, right? I'm a risk guy myself, so I go to the 5 C's of credit model, right? And if you start with the character of the investors that have been in this space, have displayed resilience, have built up acumen, from long-tenured presence in helicopters, but also relevant rhyming industries, have invested and seen everything from deployment to recovery, you get a sense that you're dealing with a community that has the chops, right, to support an investment menu and potential set of outcomes as would come along with helicopters. And they do that in a form and in a support level that shows up in the capital that's invested in the space, right? Both in terms of cash and then in terms of potential outcomes and potential realizations. And they do that in an asset class which has displayed certain characteristics as collateral that carries everything from value stability, we've seen ups, we've seen downs, carries certain specific capabilities that are unique, right? I always think about kind of a simple model that somebody told me a long time ago that, hey, helicopters go up, they go down, left, right, hover, and they do that in end markets that are both civil and purely private sector, and also in end markets that are state-sponsored, and that's a unique set of capabilities across uses, and that affords them access to cash flows that can support investors and creditors structuring appropriate risk-adjusted returns, and in fashions that can be readily repeatable from a conditions perspective. And so if you apply that simple sort of 5 C's of credit model, it makes sense that over time, banks have supported different investors in this space. And for First Citizens' part, just briefly, right, $250 billion, $250 billion approaching asset institution with the history that goes back through the CIT days, acquired CIT, acquired Silicon Valley Bank, has a long history in the States of being a relationship bank, with a practice focused on aviation, aerospace, defense, and government finance. We, led by Edward Vernedz, we have, let's say, an appetite for a wide range of exposures, and we view helicopters as having a strong, let's say, place among those different things, whether it's alongside fixed-wing aviation, engines supporting those, spare parts, folks who are essential to the manufacturing side, services companies. Helicopters fit in because of those properties across the 5 C's, and an ability to kind of repeat exposures that are appropriate in that context.
Okay, thank you, Ray. Anybody else like to go next? John, perhaps?
Yeah, sure. I think from our side, the interesting part of the helicopter market is that it's not one single asset class or type. So the diversification across offshore, EMS, search and rescue, and firefighting has really allowed us to see that often these underlying industries within the helicopter industry is counter-cyclical. So our credit committee takes a lot of comfort ultimately in, although there may be a downturn in oil and gas, there's significant ongoing long-term government contracts within the EMS space. So that's key to kind of the off-take view that we see in the helicopter industry. Ultimately as well, I think there's an appreciation for the value retention of the assets. While again, the heavy market has seen its ups and downs over time, what we've seen is that certainly the medium and the light twin helicopters are long-lasting assets that hold their value over time. They're not pressurized assets like the fixed wing space, and you're seeing helicopters that are 30, 40 years old still flying. And I think there's a good appreciation of the value retention ultimately as a backstop when looking at refinancing.
Jöerg, would you like to go next?
Yeah. Okay, sorry about that. Maybe the one thing to add is, why do we like to lend into the helicopter space? We are relatively new to the space, but as Helaba has always been at home in the world of real assets, so we're very active on the project finance side, on the asset finance side, and what actually brought us to helicopter is the fact, we've been active in fixed wing side for more than 30 years, and it's really, we like that we we like an industry where you need your know-how, where you have the ability to structure and mitigate risks, but this knowledge has to be of value. And if you look at the fixed wing side, Pat said it before, it has been very much commoditized by now. And that's actually something which drove us away from the fixed wing side and looking more into helicopter now. And the other thing, as a lender, I absolutely see that as a positive, as a boringly steady market. That is actually a very positive thing from a lender's point of view. So those are two things which we find quite attractive on the helicopter side, albeit it's a much smaller market, of course. Yeah.
Thank you, Jöerg. David, Arnaud, would you like to go next? Or?
Yes, actually I can confirm that we see a lot of activity from the bank, and especially from the bank who were previously in the aviation, looking now more and contacting us as well for helicopter opportunities. Actually, what I would say is that if you have a good aircraft, if you have a solid contract behind an operator, which is doing its job into having good cash flows which can repay the debt. If you have a good structure behind, then you can for sure have good transaction which makes it interesting for the debtors.
Thank you. And last but not least, Arnaud, would you like to say a few words?
I'm not sure about the list. So good morning. Thank you very much for welcoming us today. As far as Bank of China is concerned, I think we have quite a strong presence in transportation, and particularly in aviation. We have a leading platform in Singapore. So aviation fixed wings is a core segment for the bank. It's a strategic subject for us. And I think we are supporting the aviation industry, fixed wings, throughout the food chain, from OEMs, lessors, airlines, and even what I call aviation services, such as air traffic control and so on. So aviation is not something which is completely new for Bank of China. What is new is helicopter. I feel that it's a segment which is strong, obviously not as strong as mentioned earlier than the fixed wings. And I feel it's also a segment which is relatively to fixed wing, which is underserved. And as we are taking an opportunistic approach, focusing on the right opportunities, we feel that there are some strong opportunities in this segment. So we closed last year our first transaction in helicopter with our friends from GDHF, with the support of Airbus, of course, and we felt very comfortable. Maybe we can come back to this, but what I think I like with helicopter is really diversification to what we have in the portfolio and within the segment. And as long as you go with the right partners for the right asset, in this case the Airbus H160 that we felt is a very strong asset, we feel well equipped. Of course, there is one thing is, and that was mentioned earlier, it's significantly less liquid than the fixed wings, and as such, significantly riskier. And as we know, we don't know, I think we are taking a more cautious approach to the helicopter segment than we would take on the fixed wings. And with this in mind, I think the natural way for us would be to partner or to support operating lessors that we feel bring experience and expertise, both in terms of technical knowledge and remarketing support. And I will stop here.
Oh, thank you, Arnaud. So I think just moving on to sort of my next question for the panel, sort of drilling into a bit more detail in terms of the actual finance products that you're providing. What exactly are you looking to provide in that space? Are you sort of looking at secured or unsecured financings, full recourse or non-recourse financings? Is there a specific focus on lessors or operators? And maybe David, if I could begin with you.
Yes, thank you, Andrew. I take your 2 points, secured, unsecured, recourse, non-recourse. Maybe first, let me say that there are most probably lots of operators who are here and lessors who are looking for financing of helicopter, who wants to grow. We see lots of activity, so we will hopefully here discussing this panel try to dig more into the condition, the way banks sees what kind of condition and structure they need in order to offer financing. We may use some jargon words, so I'm sorry for this already. Recourse, non-recourse is the first step in it. We'll try to define. If you have other questions, we are of course available afterwards in any case. So going into your question, first of all, at Airbus Bank, so by design, so to say, we are part of Airbus, we are a bank, so we are at the intersection of the world of manufacturing, the world of finance. Myself, I'm an engineer, half of our team are engineers. And we are very happy to take asset risk. So we like assets. We finance only Airbus helicopters at Airbus Bank. And we like those assets, and we're taking, and that's the key point, what are banks for, actually? They are lending money, yes, but it's not only about lending money, it's about taking risk. So at Airbus Bank, we are taking the risk of the asset. So that's the first answer to your question. We're doing only secured financing, secured by the asset, first of all. On recourse, non-recourse, actually the question is less, and recourse, it means a guarantee, having an external additional guarantee. For us, the point is more the structure, the contract, which is behind, which we look at. As Pat said, the assumption behind the business plan of the operator who is asking for to finance a helicopter, or the lessor in case of operating lease. So the question of recourse, non-recourse is more linked to the solidity of this whole aspect. And to put it in a few words, so we like the metal, we trust Airbus to do nice aircraft, and then it's to the operator, to the end user, to the lessor, to put in place the right structure, the correct assumption, and we will take then the risk on the asset.
Arnaud, would you like to add anything?
Sure. Well, we don't work with we don't belong to Airbus, so I think we're open to all manufacturers, but we like working with Airbus too. As far as the structures are concerned, I think we won't be innovative. I think it's fundamentally a volatile industry, and the focus, like for fixed wings, will be on a secured basis. Whether it's on a recourse or a non-recourse, I think it doesn't matter. What matters for us, exactly as you just said, is what we call the prime source of repayment. So we want to be sure that there is a robust demand for helicopter with a first operator, which means we want to have a good quality operator, and we also want to have, ideally, a long-term lease, first lease. I think we want to avoid having to repossess the helicopter after 24 months. So quality on the asset is very important. Of course, the unsecured segment is something that we can consider, but it would be only on very specific conditions, depending on the quality, the credit rating of the platform. And I suspect this is something which is unlikely to happen except for top operating leasing structure. Back to what we do in terms of structure, beyond the helicopter, I think what's important is the security package. I think we want to make sure that we are equipped to tackle a repossession or remarketing as and when it will occur. It's not aviation, and this is, I think, true for helicopters, is not about whether there will be a crisis, it's a question of when will be the next crisis, and how are we equipped beforehand to tackle the upcoming crisis. So when it comes to helicopters, what I think is important for us is, as I mentioned, a good quality helicopter, a good asset, a good long-term contract, but also all the security features that we have. And this can include maintenance reserve, security deposit, and to an extent possible, some form of support. It can be from manufacturers in terms of technical and remarketing.
Thank you, Arnaud. Jöerg, perhaps you'd like to go next?
Yeah, I think there's not that much to add. I mean, we're generally looking at all types of structures. I think the most important thing is it has to make business sense. I mean, if you're looking at a new liquid helicopter, yes, we're obviously more open to take asset risk than to one which is less liquid. So it always depends on the individual transaction. The one thing I would like to add is that as an asset financier, we are strongly focusing on secured lending. And I think the beauty of that is really that it enables us to make non-investment grade risk bankable to add that security. I think that's the important point. That's not to say that we will never do unsecured, but the focus will strongly be on secured lending.
Thank you, Jöerg. John, perhaps?
Yeah, very similar to some of the other lenders on the panel. Our focus on secured lending primarily, looking at the asset as the backstop ultimately. We provide debt to both operators and lessors. When looking at operator, typically on a recourse basis, so i.e. fully guaranteed by the operator. But when often partnering with a lessor, then it's a non-recourse basis, looking through to the underlying lease to perform the debt serviceability. There's obviously the nature of the reliance on the lessor in that case, in partnering with someone who has good skin in the game, and ultimately you back and believe in their remarketing and technical capability as well, given the enhanced risk under that structure. But yeah, secured and both non-recourse and non-recourse.
Thank you, John. Ray, would you have anything to add?
Sure. Primarily secured in this space, but for very robust credit profiles and kind of rhyming segments, we've taken unsecured exposures. We've taken recourse and non-recourse exposures. On the non-recourse side, you're certainly looking for a sense of scale, a sense of kind of multiple levels of backstops within that particular story that get you comfortable as a senior lender. But for the most part, secured.
Thank you all. So I think sort of going into sort of a particular subset of financing, there's been a number of OEM orders of late. I mean, are you open to pre-delivery payment financings? And Jöerg, perhaps if I could ask you first.
PDP financing. We have done that on the fixed wing side, and generally we like to be open to all kind of structures, and especially if they are innovative structures. Having said that, I'm not entirely convinced that on the helicopter side it makes too much economic sense. I mean, to start with, those are complex transactions. So transaction costs tend to be relatively high, and given the amounts which are involved in PDP financing, I'm not sure that makes too much sense. But again, always happy to look at it. And then the other thing I would like to add is it also very much depends on the OEMs to what extent they are willing to cooperate on those transactions. I think that, and also, that also impacts the complexity of the transaction. So as we haven't done that yet on the helicopter side, I have no first-hand experience in it, but as I said, we would be open, but I think I have some doubts whether that makes a lot of sense.
Thank you. Arnaud, anything to add?
Well, I would agree with Jöerg. It's not the focus for Bank of China. I think we could do it. We can do it. The question would really be what is the price we would get access to the asset if we need to. And as for the fixed wings, I think there was a pre-2006 and post-2006, at least for the fixed wings. And, you've got this uncertainty with regard to what is the assignable price or step-up price or whatever, which means that you're not sure that you're getting the actual right value price, which means that as a debt financier, you will get covered. So we would probably we could consider this only when first we have a good quality obligor, because I see the PDP financing as an unsecured product. I have the right potentially to purchase something which at a value which I have yet to understand whether it's good or not. So I think it's back to the question: can we do unsecured?
Okay.
We will consider for the right opportunities. PDP for me is unsecured, but this is up to our friends, OEM's friends, to prove us wrong.
Thank you, Arnaud. John, I see you're eager to add something there.
I think a lot of my other panelists are correct in saying it's not as active in the helicopter market yet. We'll see where it happens and where it goes. It's a good point in terms of it's being more of an unsecured view, noting that we've all said that we do secured financing here. But it's certainly a product that we're willing to consider and have been active in the past. The big thing about PDP financing is securing ultimately the takeout, so the financing once the aircraft is actually delivered as well. On a standalone product basis, probably not one that we were able to consider, but when it's linked to the ultimate financing of the helicopter on delivery, then it's something that's very much of interest to the bank.
David, you have anything to add from an Airbus perspective?
Airbus has been financing Airbus Bank for 10 years now. We've done finance lease, operating lease, new used aircraft, oil and gas, EMS, SAR, all the sector. But as we get our money from Airbus, we don't do any PDPs.
Thank
it
you.
Would be a little bit left pocket to right pocket.
Yes, quite. And Ray, do you have anything you'd like to add to this? Or?
Yeah, just in brief, we hadn't considered PDP financing within this space. We've seen examples of it in kind of large, very diversified, borrowing-based governed constructs for very ubiquitous, commercial aviation assets supporting fixed-wing market, but it's not a section that we've taken part in so far on the helicopter side.
Thank you all. So I think just sort of moving on to a separate topic, I think I reflect on the panel last year, just had 2 lenders on it, now we have 6. So we're clearly seeing a number of new entrants or lenders returning to the space. How competitive do you find the market to, say, 12 months ago? And David, perhaps if I could begin with you.
No, we see, as was said previously in here in the panel, there is clearly a dynamic, and we can see how big the panel is. So I've been here for a few years. Don't remember such a big panel of debt. So there is clearly an interest. We get banks who come to us and say they are interested. For the time being, I must say that if we look at the transaction which have been done, it's not completely implemented. On the others, and again, we are, not again, but we are happy to partner with all co-lenders. So here and others. So in order to, one aspect we didn't speak about is portfolio and having mitigating some risks by diversification. So having a portfolio, multi-sector, for example, or multi-type of aircraft, which is something which we can do to have bigger volumes as well in transaction with further partnering between lenders. So very happy to discuss it and to do it. The other point, which what we see in the market it was already commented. I will not go further there, but there is a consolidation in the lessor market. There are PE funds, which are also quite active in the market behind operators, for example. There are debt funds who are coming also into the market with more flexible products, which is also good for the market in general. For us, it's also some incentive to go beyond and to find always more customized transaction, more customized structure for our clients. I think all in all, competition is good. Competition is very positive. It forces us to differentiate and to really bring value added into the transactions.
Thank you, David. John, would you like to go next?
Yeah, I think most of those points are correct. We entered the market in helicopters after being in fixed wing for a long time in about 2019. We came to this conference and there weren't many banks around. Kind of looked around and said, what don't we know? But learned a lot of the lessons of the past, I think, from the entrants that have left and have come back into the market as well. You correctly point out that there's a number of private debt funds that have also entered the market. The lessor space, as much as it's consolidation, there's a lot of smaller lessors that have entered the market with private equity backing as well. And in some cases, they're participating in private debt as well. I think the focus is to make sure that as there's an ease of accessibility to capital, that we still learn from the decisions that were made in the past and kind of stick true to make sure we have that stability in the industry going forward as a whole in terms of aircraft.
Ray, how competitive are you finding the market, would you say?
What I'd comment on is certainly the same point that folks are making. Look, there are six lenders on the stage here as part of this panel. Certainly for those of us who come into this conference at different times and different stages in the market have seen it dwindle into a place where, I can recall a year of folks being on a panel saying, are there any lenders that would touch helicopters? And at the time, the kind of response is, at the right structure. And we talked about the context of the 5 Cs initially, and I think that is what is caught the attention of lenders and made folks come in, made folks repeat in the space. And so it's good to see the count of lenders hopefully increasing over time. A depth of capital markets is a healthy sign for the space, and you'd certainly like that to increase over time if you're going to be a part of it and stay in it.
Thank you. Arnaud?
Well, I'm happy to answer the question because I don't know the answer. I was not there last year. What I can say, so I can't say whether there is more competition or not. What I can for sure say is, as I was earlier suggesting, I believe, compared to the fixed wing segment, it's still fundamentally underserved. When you speak with strong aviation banks on the fixed wing segments, it's not rare to have feedback or comment that helicopter is a strict no-go. And I think you have the appetite on the fixed wings, but the appetite on the fixed wing doesn't really get to support the helicopter business. My point is, perhaps, OEMs could do a better or a stronger job in spending time simply giving confidence to the banks that it's a good asset. Again, I mentioned earlier Airbus. We spent a lot of time with Airbus last year, and we were absolutely convinced with the quality of the product. And I think, once you understand what the product is about, and if you go with the right partners, I mentioned GDHF earlier, it's strong. So I don't think there is much competition. I think there is a bit of competition. Competition is good, as we said earlier. But I think we probably, if I compare again with fixed wing, I think we are on the finance side and not the leasing side. I think we are only at the beginning of a journey. I would think, I would hope. But again, I think the key to a liquid market from the funding side would be having a liquid helicopter, a versatile product, and to the support from OEMs.
Thank you, Arnaud. Jöerg?
Yeah, I mean, as a lender, I don't mind a bit of healthy competition. When it does become difficult is when there's like on the helicopters, if there's overcapacity, if there's too much liquidity, then this in the long run typically has negative effects. But I don't see that yet.
Thank you all. So I think we've already touched upon it in part, but in terms of your transactions, do you tend to look to syndicate them, or are they for the most part bilaterals? And if you are syndicating them, are you finding much sort of appetite in the market now, which I guess is a corollary to the question I've just asked before. And Shaun, perhaps if I could start with you.
Hi, everybody.
Oh,
I thought this might have gone to sleep in the time, but it's working, so hopefully you can hear me. So look, we've had the pleasure of working with a lot of you in this room, and a lot of you have put the trust in NatWest to structure and arrange some of the biggest transactions in this market over the last decade. So, within NatWest, we have written new paper for just over $1 billion over the last, I think, 8 or 9 years in this space. Syndication is definitely a tool we need to use. We can't take and hold everything on the NatWest balance sheet. We've tried in the past, for sure. And the value we add to our clients is on a range, right? So from one extreme, is there's transactions for one reason or another we can't lend into. Clients still ask us to do the structuring, source the appropriate capital to fit that structure, help with the documentation, and agent the deal through the life. So that tends to be a rarity. We do generally find ourselves being the largest lender in most of the transactions that we are arranging. And where we've got a transaction where it is outside or it's too big for the appetite for the bank, we then have to make a strategic decision on whether we're happy to take that market risk and underwrite the transaction, or whether we need to bring in partners in primary at closing. And how we look at that is in various different ways. It obviously depends on the structure and the characteristics of that individual transaction. And then there's transactions where we'll just do bilaterals, large bilateral deals for clients that we know have got regular CapEx plans, and we're writing those big deals with a view that over time we are likely to distribute them in secondary. And the plan is there we're trying to match up the sell down of our exposure to create capacity. So then when our clients coming back to the market with a new requirement for capital, we have got the capacity there to be able to support them. We kind of place, we work with a lot of bank partners, we work with private debt, we work with institutional debt. Institutional debt's probably a little bit trickier in this sector, but we have managed to do that. We work with ECAs as well in transactions to help unlock additional capital within the bank. And it's, from the last session, it's bringing more banks into this space has been a real challenge over the last couple of years. So when we turn up to aviation conferences and want to talk about helicopters, a lot of those conversations were shut down immediately. We're starting to have banks that are willing to at least discuss it now, and it's great to see some new banks coming onto this panel, looking at deals, investing the time in looking at this asset class. It's a great part of the industry, but you do need to understand what you're doing in this space, and we've been in it through the cycle. We've managed, unfortunately, quite a few restructurings over the years. It was the first meeting that I ever did in this space was one of our biggest clients telling us they're going to file for Chapter 11. So we've learned institutionally, we've learned a lot, and it's making sure that we support our banking colleagues through that journey as well. As also there has been other banks like us that have been lending through the cycle. Ray, we've done a ton of deals together over the years. So I'll maybe pass it over to you for your thoughts on syndication and.
Yeah, and thanks, Shaun. I think we work off of very similar playbooks, right? We've been on the other sides of leadership roles and facilities over the years. For First Citizens Bank, it's back through the CIT heritage, where right early on it was, kind of 1 and 2 here, 3 and 4 there, and then certainly you end up wrapping up a larger set of exposure that you bring in other lenders into, and in the context of what the growth trajectory could be, whether early on it was talking about the lease fleet penetration story or stability stories for different end markets, the story of the capital partners that were involved, and certainly, Shaun, a point that you made that I think is really important to kind of reiterate here is that lender education process being essential and critical to increasing the depth of capital markets. Again, it goes back to that thought that increasing competition and as far as lenders go, or the number of lenders on stage wanting to take part or otherwise, it's not something is unwelcomed. And in fact, I think there's plenty of room to run as far as finding additional lenders to come into the space to just generate kind of a healthy, far beyond critical mass sort of representation of a banking community supporting this space. And that's something that we want to continue to try to encourage. But yeah, in terms of First Citizens' appetite itself, sure, we take syndication approach. We have a capital markets outfit fully, but also, and I'm sorry, I'm kind of going. The southeastern U.S. is coming out of me a little bit. I'm thinking of home in Georgia and the barbecue. Like, if you make something good, you want a big plate yourself, right? And so we certainly like to eat our own cooking. We take exposures kind of on a bilateral basis. We'll do exposures, kind of case to case, right? So for the robust portfolio exposures, we've taken kind of 9-digit type holds, and within the helicopter space, certainly subject to structure, there are opportunities to do that hopefully in the future. But I think the context here is, what we've seen is, an ability to do things ourselves or an ability to syndicate.
Thank you, Ray. I'm conscious we are sort of actually getting limited on time. Yeah. So perhaps if I move to the next question, and I'm conscious, Shaun, apologies, I have been very negligent in sort of not asking you questions to date, so I'm going to focus on you now.
Shaun is patient capital.
And we'll probably move on to sort of some Q&A as well. So I guess the question about leaving deal execution itself aside, how quickly are you able to move from origination through to sort of investment committee approval, would you say?
Internally, that's actually one of the few things we're really strong as a bank. I mean, there's a lot of internal process that's is a little bit trickier for us to manage. But getting quick decisions on transactions and getting executive buy-in is something we are really good at, and we use it to our advantage to win a lot of mandates. So we have regular executive committee forums that we can present deals in very one-page format to be able to get that initial buy-in. We have great access to our senior leadership that ultimately sign off on these transactions. So being able to move fast on identifying the deals that we want to do, it does help us win mandates.
Thanks, Shaun. I think, Arnaud, do you have anything to add perhaps on this point, or?
Sorry, I was looking at the question. Which question, sorry?
So this is about sort of how quickly you can move from sort of origination through to your investment committee approval.
From origination to distribution, you mean? Sorry, I didn't get...
Sorry, from originating the deal, so sort of going out and originating it to sort of getting the full approval, and leaving sort of deal execution.
I think we can be quite quick for the right opportunities. Usually, origination can take any time between a few weeks to a few months. And then once the parameters of the transaction are known in terms of having a term sheet signed and so on, the credit process can be quite quick, so it can be 2-3 weeks. And then implementation can start very quickly thereafter.
Okay. Thank you, Arnaud. So I think I can see there's a series of quick questions up. We have, I think, 7 minutes remaining. So I think it's one of the topical points we were going to turn to, which is what particular sectors and assets are of interest, so such as firefighting, EMS. And I think, Shaun, I owe it to you to sort of give you first dibs again. So.
Thank you. Yeah, so certainly where we look at deals fundamentally, the very starting point is the stickiness of the asset to the ultimate end user or beneficiary of the aircraft. So things like search and rescue is fantastic for that, where you're looking at what are the restrictions or barriers for that end user to be able to deviate away from the assets that you're financing. And if you've got a really strong message there, then that really allows you to be quite bold with the credit appetite on those deals. So anything that's got that stickiness, those barriers to exit for the end users to be able to deviate to a different asset. So search and rescue, EMS is great for that. The oil and gas sector has been obviously the challenge for the last few years of that, where we've had those ability to come out of contracts early. That makes it a very difficult asset to make a bankable financing option. So yeah, most of our activity has been in the emergency service side.
Okay. Thank you. I think, John, do you have anything to add on this, perhaps?
Yeah, I think I started by saying that the reason we like the sector is the different underlying industries that are within it. So I think the approach from our side is to take a diversified portfolio across all of the sectors. We're certainly active across offshore, search and rescue, firefighting, and EMS. The ticket sizes we generally see in the offshore sector are bigger, so that does attract the bank to it. You often do need to bundle together a couple assets in the industries, typically when it's pre-owned, to get to a transaction size that's meaningful. But we certainly look to balance our risk across the different industries.
Any other takers in sort of the time that we have left? Or you all good? So I think just turning to one of the questions here. So to you, Arnaud, financing a new type like the H160 is bold. What made you consider this? Are there any specific efforts by the borrower or OEM?
That's a very interesting question. Thank you. So as far as we are concerned, and I think this is something that we worked alongside our friend from Helaba. Of course, we did our due diligence separately, but we spent a lot of time first understanding the asset. And so we went to Marseille in Marignane with the support of Airbus. We spent time understanding the quality of the H160, how this aircraft would compare to its peers. Not only in terms of performance, but in terms of price. And also, what we like with helicopter was really the versatility of the asset. That was the first point. Of course, we had support from Airbus to understand where the need for the helicopter would be, with a pretty nice mapping of where the aircraft could fly. GDHF as a borrower was obviously a strong element in our decision. We were quite impressed with the quality of the team, starting with Michael and of course Peter at GDHT level. So we were very convinced with the expertise of the people we were dealing with. And in this specific case, we also had the support from BPI, French government, which was one part of the decision, but of course, with a support of 95%, I think it helps you when making a decision. So if I look at the overall structure, I think we have tackled quite a lot of nice boxes in terms of considering the quality of the transaction. Beyond Airbus, GDHF, GAT, and BPI, we are also quite convinced with the quality of the structure. Those transactions, and this is to GDHF, I think they are well-structured transactions, with good quality leases, good security package, not only in terms of asset, but also in terms of maintenance reserve, in terms of deposits, in terms of care to the helicopter. So all in all, I think we feel comfortable. And who knows, it's sometimes good to be bold, I sometimes refer the H160 to the A320 a few decades ago, so who knows.
Thank you, Arnaud. I think, David, there's a question for you here, which is, being an independent bank, would you be open to finance helicopter or aircraft made by other OEMs?
I was waiting for someone to ask something else, so that it can be kicked away. So as Arnaud said, what is important is the quality of assets. So we made an independent big audit, and it turns out that the best assets, Airbus assets. So we only finance Airbus assets.
I guess final question here. which is open to anybody on the panel. So what advance rates do you see in the market today, and what asset types or configurations are you willing to offer the highest advance rates for? So anyone?
I'll start. I'd say it's less asset, from a NatWest perspective, it's less asset type and configuration versus actually what the underlying cash flows that the aircraft is generating. And again, that stickiness of the asset with that end user or end beneficiary of the aircraft, that's what we would look at really to peg the advance to.
Yeah, I'd piggyback and say that's appropriate. That's kind of one of the institutional similarities and why we've been able to work together successfully over the years. It's, you take a look at what you actually get within the story and what you actually have to structure with, right? And you work within that. So, assets that are deployed in repeatable fashion for foreseeably stable demand with cash flows that are robust can support much higher advance rates than those with kind of stories that come with more asterisks. And so that can, lead to scenarios of asset types which maybe in broader generalized sense might not be viewed as, more or less attractive or one way or the other in comparison to others, taking advance rates that may be outside of the specifics of a story would seem odd. And so advance rates, you kind of work backward to them as opposed to starting at advance rate and then flow from there. It's kind of, seems like maybe cagey answers, right? But I think the key piece is we're trying to demonstrate that there's an appropriate level of flexibility there. We have to sort of financially engineer into the advance rate that makes sense from a risk adjustment perspective so that we can then have the appropriate risk adjusted return.
Thank you. John?
I think valid points, and I think also the ultimate structure of the deal makes a difference. When you're looking at an export credit agency financing kind of structure, you normally see those advance rates much higher, but you come with a less flexible structure. Apologies.
We're out of time. Is it still?
Is it still on?
Still feedback.
So yeah, ultimately the structure dictates also the advance rate you're willing to consider, but you also got to understand where you're sitting in the capital stack. If it's a senior lend, junior, or mezzanine financing, then obviously you can look to push the LTVs on day one as well.
Well,
Kicking us all.
I think that is telling us our time is up. But thank you very much, all six of you. If we could all sort of applaud the panel in the customary manner.